Picture this for a moment. It's the middle of the month. You're sitting at your kitchen table with a cup of coffee going through the mail. And there it is, a plain white envelope from the Social Security Administration. Your hands get a little cold. You open it, and inside is a notice you don't fully understand. Words like withholding, recovery, overpayment, numbers that don't match what you expected, and no clear explanation of what you're supposed to do next. Your heart starts beating a little faster. You worked your whole life for these benefits. You paid into the system from your very first paycheck. And now, in retirement, when you finally have time to relax, the rules seem to keep changing every few months, and no one is sitting you down to explain them. I want you to take a deep breath, because today I am going to explain everything, slowly and clearly. My name is Artur. I'm a senior policy analyst, and I help retirees just like you understand the rules that protect your money, your benefits, and your peace of mind. Today I am going to walk you through 4 major Social Security rule changes that are affecting every retiree right now. I'll show you exactly what each one means, the traps that catch good people off guard, and the precise steps to protect yourself. And I need you to stay until the very end. Because there is one mistake I see seniors make all the time. A small mistake, a quiet mistake, but one that can quietly drain half of your Social Security check for years. I want to make sure you never fall into it. Before we begin, let me tell you about Margaret. Margaret is 72 years old. She lives alone in a small condominium in Ohio. Her husband passed away 4 years ago. She receives Social Security retirement and a small survivor benefit. It's not much, but with careful budgeting, it covers her bills. Last spring, Margaret got a letter from Social Security. The letter said she had been overpaid almost $4,000 over 2 years, due to a mistake the agency itself had made when calculating her survivor benefit. The letter gave her 90 days to respond. Margaret didn't understand the letter. She thought it might be one of those scam letters her daughter had warned her about. She set it aside. Then she forgot about it. 91 days later, her Social Security check arrived. It was cut in half her income, gone, without warning. She called Social Security in a panic. The woman on the phone was kind, but explained that Margaret had missed her appeal window. She could still request a waiver, but it would take months to process. In the meantime, her benefit would stay reduced. Margaret cried that night, not because of the money, because she felt the system had taken advantage of the fact that she didn't understand the rules. I don't want that to be you. So let's go through this carefully. 4 real rule changes, 4 real protections, 1 real strategy to keep your money safe. Let's start with the first one. Rule number 1, the 2026 Cost of Living Adjustment. The Social Security Administration officially announced a 2.8% COLA for 2026. That means the average retired worker's monthly benefit went up from $2,015 to $2,071. That's about $56 more per month. The maximum benefit for a worker retiring at full retirement age went from $4,018 to $4,150. This applies to retirement benefits, survivor benefits, family benefits, disability benefits, and supplemental security income. But here is where seniors get tripped up. They look at that $56 and they plan their grocery budget around it. The problem is, the full $56 does not actually land in your checking account. Why? Because the standard Medicare Part B premium also went up in 2026 from $185 to $202.90 a month. That's a 9.7% increase, and it's automatically deducted from your Social Security payment. So after Medicare takes its share, your actual COLA increase is closer to $38 a month, not $56. If you built your budget assuming the full amount, you may already be short. The second trap with COLA is taxes. The COLA itself is not taxed as separate income, but it can push you across the threshold where up to 85% of your Social Security benefits become federally taxable. That's a real risk if you also have a pension, an IRA withdrawal, or a part-time job. Your protection here is simple. Log into your My Social Security account at ssa.gov My Account and view your personalized COLA notice. It will show you exactly what you'll receive after the Medicare deduction. If a payment looks wrong, you have the right to call Social Security at 1-800-772-1213 or visit your local field office to request a recomputation. Rule number 2. This is the one that hurt Margaret. In March of 2025, the Social Security Administration announced it would go back to withholding 100% of monthly benefits to recover overpayments. After massive public outcry, the agency revised that in April 2025 and set the default withholding rate at 50% for new overpayments of retirement, survivor, family, and disability benefits. That 50% rate applies to any new overpayment notice you receive going forward. The old 10% cap still applies to overpayments from before March 27, 2025, and to all SSI overpayments. Here is what every retiree must understand. By law, Social Security is required to recover overpayments, even when the agency itself made the mistake. That feels unfair, but it is the law. If you ignore the notice, withholding begins automatically after 90 days. The good news is, you have 3 powerful legal rights. First, you can appeal the overpayment determination by filing Form SSA-561, Request for Reconsideration. If you believe the amount is wrong or the overpayment never happened, this is your tool. Second, you can request a waiver by filing Form SSA-632, Request for Waiver of Overpayment Recovery. This is for situations where the overpayment was not your fault, and paying it back would cause real financial hardship. Margaret could have used this form. Third, you can negotiate a lower repayment rate. Just call 1-800-772-1213 or visit your local field office and explain your situation. And here is the critical detail. While your appeal or waiver is pending, Social Security does not pursue recovery. They stop the clock. That is your shield, but only if you use it within 90 days. Rule number 3. Higher earnings test limits for working retirees. If you are collecting Social Security but you have not yet reached your full retirement age and you are still working, this rule directly affects you. For 2026, if you will be under full retirement age all year, you can earn up to $24,480 before Social Security starts withholding. Above that, they withhold $1 for every $2 you earn. If you are reaching full retirement age this year, the limit is much higher, $6,560, and they only withhold $1 for every $3 you earn above that, and only for months before your birthday. The moment you reach full retirement age, the earnings test disappears completely. No limit. You can earn as much as you want without any benefit reduction. Now here is the trap most seniors fall into. They think the money Social Security withholds is gone forever. It is not. Once you reach full retirement age, Social Security recalculates your monthly benefit and increases it to recoup the money that was withheld. Over time, you get it back. A second trap is confusing the earnings test with the taxation of benefits. Even after the earnings test goes away, up to 85% of your Social Security can still be federally taxable based on your total income. These are 2 completely separate rules. If you are still working, talk to your employer about Form SSA-131, the Employer Report of Special Wage Payments. This form protects you if you earned the money before retiring but it was paid out after. Rule number 4, the new $6,000 senior tax deduction. Under the tax legislation Congress passed in July 2025, often called the One Big Beautiful Bill, there is a new enhanced deduction of up to $6,000 per eligible person age 65 and older. For married couples where both spouses qualify, that's up to $12,000. It's available for tax years 2025 through 2028. To get the full deduction, your modified adjusted gross income must be $75,000 or less if you file single, or $150,000 or less if you file jointly. There is a partial deduction available up to $175,000 single or $250,000 joint. Above those numbers, you get zero. This deduction is in addition to the standard deduction and in addition to the existing extra standard deduction for taxpayers 65 and older. It is a real stackable benefit. Now here is the trap. I have heard seniors say, "This means I don't pay tax on my Social Security anymore." That is not what it does. It reduces your taxable income, which can lower or even eliminate the tax on your benefits for many retirees. But the underlying rules from IRS Publication 9-15 still apply. The deduction is also temporary. It sunsets after the 2028 tax year. So do not build a permanent retirement plan around it. And one more important thing. If you were eligible for this deduction in 2025, but you missed it, you have 3 years to file Form 1040X, an amended return, and claim the refund. So let me now give you 3 exact actions to take this week. Step 1. Create or log into your My Social Security account at ssa.gov My Account. Do this today. This is the only verified place to see your real benefit amount, your COLA notice, your earnings record, and any notice from Social Security. Do not rely on letters that come in the mail without verifying them through your account first. Step 2. If you receive any notice from Social Security, especially anything mentioning overpayment, do not throw it away and do not assume it's a scam. Open it. Read it carefully. Mark the date you received it on your calendar. You have 90 days to appeal or request a waiver. Call 1-800-772-1213 or visit your local field office right away if you don't understand what you're reading. Step 3. Before tax season, sit down with a tax preparer or use IRS publication 5554, the tax guide for seniors, to check whether you qualify for the new $6,000 enhanced senior deduction. If your income falls within the limits, make absolutely sure it appears on your 1040. If you missed it last year, file Form 1040X to get the refund you are owed. Now, the hidden mistake I promised you at the beginning. The mistake is silence. When seniors get a confusing letter from Social Security, the most common reaction is to set it aside, to wait, to ask a family member next weekend, or to assume it will sort itself out. It does not sort itself out. The 90-day clock keeps ticking. The withholding starts. The deduction is forfeited. The appeal window closes. Every right you have, every protection in the system, every form I just mentioned, only works if you act inside the deadline. Silence is what costs seniors their benefits, not the rules themselves. And one last protection I want you to hold on to. The Social Security Administration will never call you and demand immediate payment. They will never threaten to suspend your benefits over the phone. They will never ask you to pay in gift cards, wire transfers, or cryptocurrency. If you get a call like that, hang up. It is a scam every single time. Real Social Security communication comes through the mail and through your My Social Security account. I want to leave you with this. The rules around Social Security are changing more rapidly than they have in years. New deductions, new withholding rates, new income thresholds. The people who lose the most are not the people who break the rules. They are the people who never hear about the rules in the first place. So please do not rely on YouTube notifications to keep you informed. Notifications fail. Algorithms shift. The only person who can truly protect your retirement is you, with accurate information and timely action. If this video helped you today, please subscribe to Senior Pension and Benefits Hub and turn on the bell. But more importantly, share this with one friend who relies on Social Security. Send it to a neighbor. Send it to your sister or your brother. You might be the reason they open that letter on time. You might be the reason they keep their full check next month. I am Artur. Thank you for trusting me with your time today. Stay calm, stay informed, and stay protected. I'll see you in the next one.